What's up, everybody? It's Ashley, the lone wolf, owner of Cap Funding. And in this video, I'm going to go over the 5 secrets to getting funding. And then as a bonus, I'm going to reveal how you can protect yourself from scammers online. So let's get into it. Okay, what will we cover today? Number 1, personal credit and credit history. 2, business structure and setup. 3, personal income and or business revenue. 4, cash flow. And 5, business credit. So personal credit and history. When does your personal credit matter? This is the $1,000,000 question. And so many people here on TikTok and other social media platforms are lying to you. So the answer actually is always. The banks, the credit unions, SBA, and alternative lenders will check your personal credit. Oftentimes they do it with a soft pull, and the reps and affiliates from companies will say that your credit score doesn't matter in replacement of a soft pull. So don't get tricked by any rep or company saying your credit score doesn't matter, because in fact, it is always one of the first, if not the first factor when determining if you are eligible for the financing product. Please keep in mind that if someone does a soft pull, that does not mean that it's a non-PG or a PG. Soft pulls and personal guarantees are 2 different things. EIN only and personal guarantee is 2 different things, and you can check that out in some of my other videos. So, your personal credit and history, let's break it down. Your credit score is step 1 and will always matter. Also, keep in mind to stay away from Credit Karma. Credit Karma is the Vantage scoring system, and lenders, when they're considering startup and business, they typically look at the FICO 8 or Experian. Yes, other lenders will draw from Equifax or TransUnion, but it's always best to keep your eye out and track your FICO 8 for the most accurate. You also need good credit lines reporting. Oftentimes we see clients coming in with a 740 faux score. I call them those faux scores because they don't have very long history. If you have credit history under 3 years, you're going to have a very challenging time getting approvals for loans. You may have to rely on credit cards until then. Next, if you have charge-offs, collections, late pays, bankruptcies, they can hold you back. Now, in my company, we are able to get people, certain profiles with bankruptcies at least 4 years old, funding. This is rare. Charge-offs and collections, late pays in the last 10 months can hold you back. Lenders don't want to see negatives on there. Why? Because if you have a charge-off, collection, or a late pay, it means that you either do not pay your bills or you pay your bills late. And a lender doesn't want to lend to someone if you're not reliable. Next, too much debt can hurt you, and also too many new accounts. So if your debt to income DTI is super high, let's say, 60, 70, 80, even 90%, you may have a hard time getting financing. It is typically a better option to get a consolidation loan first, lower that utilization, kind of hit the restart button, and in 1 to 3 months, go ahead and apply then. Many new accounts. It's the same thing with inquiries. So inquiries are holding you back. If you have more than 4 hard inquiries over the last 6 months, you will be an auto decline when it comes to startup or personal. You will actually, over and over again, it will. You can have an 850 credit score and get declined because you have more than 4 hard inquiries in the last 6 months. Now, you are able to remove any hard inquiries that do not result in a credit line. So if you applied to a few credit cards and you got declined, you can get those removed. Do not, under any circumstances, dispute or try to remove a hard inquiry that is tied to a line, whether it's a credit line or a credit card. If you do, that card or that line will actually get closed once you do the dispute. And like I said, the length of history matters. Again, I had mentioned that earlier, but you want to have long history. If you have some older accounts that are still reporting, but you're not utilizing it, I strongly encourage you to call that company up, see what the minimum usage is, and minimally use that card to keep it open. If you have cards that have been open 10, 15 years and you're not using them and they're dormant, that company can shut you down. And when they shut down that line, that history goes away and it can devastate your credit score. I've seen it happen. I see it happen every week, y'all. I see it happen tens to hundreds of times a month. So why does your credit matter? You're borrowing money and the institution wants to make sure that you're paying it back. It's the same way like when you go ahead and you loan money out to your cousin or somebody. I don't loan money out to people because they don't pay you back, right? And so the bank wants to make sure that you're paying them back. And again, I mentioned before, you want to beware of the non-PG offers. Many people think a merchant cash advance is a non-PG, but that's not correct. If you have a merchant cash advance and you default, they come after you personally. I've seen it hundreds of times. I don't care what anyone else says, what they're teaching you on any of these things, they will come after you personally. They do. Just because they do a soft pull, and some MCA lenders do a hard pull as well, does not mean it's not a PG. Oftentimes, you're being taught by gurus that are trying to teach you this EIN only to avoid PG, but that's not how this works. Next, what does your credit score get you for options? Now, again, keep in mind some lenders within these programs, I'm listing programs here. There are hundreds of lenders, maybe even thousands of lending options per program. Again, I'm listing the programs. So each lender can vary. So when I say a 450 plus FICO can get you a merchant cash advance, the low and bottom feeder MCA companies will approve scores as low as 450. I do not suggest getting an MCA at a 450 credit score because the factor rate will be extremely high and the risk is extremely high. Most merchant cash advances are going to want a 550. Next, 600 plus for secured or unsecured startup funding, personal loan, or equipment financing. I have seen people advertise equipment financing for as low as 550, and I will tell you that that is not entirely true. If they are approving you for equipment with a 550 score, they're going to want 20 to 30% of a down payment. So look out for that and be wary. Equipment financing also does a hard pull, typically towards the front or beginning of the process. When I put secured here, oftentimes if you're looking for a startup or a consolidation loan, they may ask for a car. They'll want equity in a car, the car completely paid off. Next, the 650 FICO for unsecured term loans, startup loan, and a line of credit. Companies like Fundbox offer lines of credit, but they are not business lines of credit. So Fundbox, Cabbage / American Express, they will give you lines of credit in the personal name with a 600 plus score. Other factors must be reached. Unsecured term loans means you don't need any collateral or upfront payments in order to qualify for this. Next, if you're looking for a business term loan, that's typically 3 to 8 years. If you're looking for the SBA 7A or business credit cards, you want at least a 680 plus FICO score. There are plenty of biz credit cards that are actually wanting a 720 plus. And I have that listed in some other videos. And 720 plus for credit union options. Most credit unions do want a 720 plus. Again, this can change slightly. There are credit unions that may require a 680. There might be a credit union that can go as low as 650, but these are the industry averages and what you will see really 8 to 9 times out of 10. Things that do not help you with startup or business funding. Please be aware of this and write this down. Credit sweeps are not only illegal, but they put you in a terrible situation. A credit sweep is this very quickly. You will be informed to file a false police report. They will tell you how to say it so it's not false. You take it, you get the false police report, you send it to your credit repair person, and they submit it. When they submit it to the bureaus, everything off your credit gets removed. If you get everything off your credit removed, now you have nothing. And it's going to take you at least 2 years to build it. Because I just said, if you have under 2 or 3 years of credit history, you're going to be in auto decline. So when you do this illegal credit sweep, you're actually putting yourself 2 to 3 years behind minimum. CPNs are another. I get into arguments all the time online. CPNs are illegal. Most people don't do CPNs right. Also, if you're a rep and you're submitting applications with CPNs on it, the lender will discontinue your relationship. Lenders see and know when a CPN has been submitted, and you will be declined. And like I said, if you're a rep and affiliate submitting CPNs, you will likely and very quickly have your rep status removed. I know this as a fact, as I am friends with the majority of CEOs from lending companies. Trade lines is another one. Non-primary trade lines do not help you like they do a mortgage. Same thing with authorized users. In fact, some programs will have you remove the authorized users and the trade lines in order to get financing. Non-primary trade lines can also put you in a great deal of hurt if that person is not utilizing their trade line appropriately. And finally, using your EIN instead of your social security number. If you put your EIN number in place of your social security number on an application, you will be in auto decline. And you did technically just perform fraud on an application. So don't do that. I don't care if your guru is telling you or not. Next, business structure and setup. Why does your structure matter? First of all, whether you're seeking grants, funding, business credit, or even a merchant processor, you'll need your company set up right. Also, if you're looking to offer buy now, pay later programs or other types of platforms, these companies are going to want you to be a legitimate business. Why? Because of fraud, because of laws, because of insurance. I could go on forever. These companies don't want to be liable for you creating a fake business or pretending that you're selling something that you're not. So that's why they want you to have your LLC paperwork and your EIN paperwork, etc. Right? So structuring your business, you want to make sure that this is going to be real simple, and everybody teaches this, right? Everybody's talking about structuring. Make sure your name is available. When you're going to get your LLC or your corp, you need to make sure that you're available. Make sure that you are not violating any trademark issues, anything like that, any copyright issues, because then you're going to have to spend a whole lot more money changing up. Then you want to register your name everywhere. It's not just 411. It's not just Google My Business. It's not just Manta. You should have a social media account, even if you're not going to use it. Register Pinterest, register Reddit, register YouTube, register Instagram, register TikTok. Why? To protect your brand. You don't want other people opening up accounts in your name. So register your thing everywhere. You need a business bank account, and eventually you need a merchant account. You need a business bank account. Do not skip over on this. People ask me, who should I go with? Chase? Chase, go with Chase. There's a Chase everywhere. You need to bank with a big banking business as your primary account. This will help with so many things. Make sure everything matches. You need to make sure that your addresses match, that your EIN matches. Save this paperwork, download it, save it on your computer, save it on your phone, send it to your email. Have this information handy. Structuring your business takes time and it takes money. You have to pay for an LLC. Your EIN is free. You need a virtual address. That costs money, okay? Things take time. Do not get caught up in these hacks or these loopholes. They do not work. You will spend more time and more money on things that do not work and have to backtrack. Stick to and focus on the path. Don't get shiny object syndrome with these gurus that are teaching you wrong. So how does your structure matter, right? Why does it matter? Because businesses have rules and laws. You need to be operating in a way that's compliant to the FTC, the SEC, and state laws. If you're a credit repair company, every state has different laws pertaining to what a credit repair company can and cannot do. In fact, over 90% of credit repair companies are operating illegally and don't know it. I would say 3 out of 10 regular small businesses are operating illegally and don't know it. Commingling funds is a no. Commingling means when you take your personal and your business funds and you commingle them. Do not do them. Not claiming your income is a no. Trying to avoid your fees is a no. I get that we're trying to reduce our credit, our tax liability, but this is hurting you in the long run. What does your business need set up? As I said before, you need an LLC or corporation. You need your EIN. You need a merchant bank account. You need a business bank account and a merchant account. You need a domain website. Go to GoDaddy. Create you an email. So you need a domain email, but first and foremost, make you a Gmail account with the name. Take that Gmail account, go to GoDaddy, register and get a new account. You'll get a 99-cent code. Buy the domain. .com if you can, .net if you have to, .co if you have to, .co. Okay, don't do any of the extra. Okay, once you get that, register with 411, Google, Yelp, Manta, all of social media. Have a virtual or real business address and use agreements, contracts, terms, and conditions. Make sure you have these things on your website and these things handy. Now, with the virtual address, I get asked this often. When you're looking up a virtual address, Opus is great and it reports to business credit. Regis is great, but these options tend to be a little bit more expensive. If you're looking for a cheap virtual office, I suggest going to inkfile.com. You can get your LLC and your EIN for free, meaning no additional fees. You'll just have to pay the LLC. You can choose the free version. I do. And they also offer virtual addresses for $29 a month. These virtual addresses are real offices. My biggest suggestion and expert advice in this is do not get a packing place for a virtual address. Do not use a PO box and do not use your home address. People say, oh, I get away with it all the time. You don't want to get away with things. You want things set up correctly the first time. It will cost you less time and money. So when you're considering a virtual address and you're like, Ashley, I'm not sure what virtual address works, what you do is you go to Google Maps, you type in the virtual address. Is it an office building? If it's not an office building, it's a no, pass, do not risk it. That's the easiest way I can teach you guys. Things that will hold you back. I've said it without saying it. If you don't have your LLC, your EIN, or your business bank account, you're going to be held back. If you're using your personal account for business, you're going to be limited. If you're using a PO box, home address, or a shipping place, you're going to be limited or declined. If your paperwork is not matching, if you have no website or online presence, you're not a real business, you look sketchy. And showing little to no personal or business income is not going to help you either. You want to show strong credit, strong income, strong banks. Personal and business income. We're going to dive into this now. Why does your personal or business income matter? When you're looking for funding, you need to prove that you can afford the loan. Your personal adjusted gross income, your net profit, your monthly income, and your cash flow is what matters. So bank statements, pay stubs, and tax returns are what they look at to determine your income. Now companies are using AI features like Plaid. We've been using decision logic for years. That's when you connect your bank account and the team will see if you can afford, or they see what's going in and out of your account. Only income reported counts. So if you are hiding cash in a shoebox, that won't count. And as I mentioned before, PayPal, Cash App, Venmo, Zelle, they don't always count for personal or business income. So the way that you are paid and the way that you pay matters. Commingling your funds is an IRS audit waiting to happen. They will do it. And underwriting will also decline you. If they see that you're doing too much inside your bank account, that risk is way too high and they will decline you. Using money laundering hacks will get you declined and also face jail time. I just dropped a video on this the other day about illegal banking activity where a woman now owes $87,000 on her credit cards because she was liquidating her credit cards and her bank account realized that she was paying herself tens of thousands of dollars a month. They not only told her that she needed to refund all of that onto her credit cards, they also stopped payment on the payments she was making to this credit card. So right now she is in a world of hurt because she listened to some guru that taught her about money laundering hacks. It's just terrible. And again, your docs, people need documents and they need them submitted the right way. So if you're not doing the things to have those documents, you don't have the documents, you're not going to get funding. You're going to be held back. So how does your income matter? How does it count? Okay. So your personal income is going to matter when it comes to personal loans, startup loans, consolidation, and an SBA 7A. The SBA and even the banks are going to look into your personal file to make sure that if something goes wrong with the business, you can still pay them. They want their money. For business, income matters for merchant cash advance, lines of credit, business term loans, SBA 7A, and equipment. By the way, the SBA 7A program actually has 6 programs inside of it. And what does your personal or business income need to be? So if you're looking for a startup or personal loan, maybe your business is 2 years or under, or you're a sole prop, you're still considered a startup, you need a personal bank account with provable income. Your personal tax return needs to be current. Extensions can hurt you. And really lenders want to see 50,000 in an adjusted gross income. That is a line item. Adjusted gross income or total income is great for you to look at. Now for business advances or loans, a merchant cash advance is an advance. It's not a loan. You will see companies advertise as low as $5,000 a month for an MCA. If you're looking for a line of credit, business term loan, or an SBA 7A, lenders really want to see you making $25,000 plus per month. So again, what are some things that are going to hold you back? Believe it or not, using a Chime bank account will have you auto declined. Yes, you will be approved for a startup or a personal loan, but then you will be declined because you're using a Chime bank account. Capital One, Blue Vine, and a few other online banks will also do the same thing. When you are getting approved for funding, the banks want to fund it to an actual real bank. Things like Chimed, they don't have the same type of insurance and backup if things go wrong. And so that's why the lenders aren't going to fund that. So if you are using Chime, it's most likely because you're in the checks system, meaning you owe a bank and you can't get a real bank account. You need to get out of the check system. Go ahead and check out my other videos on how to get out of the check system so you can get a real bank account. If you have no provable income, so either you're not making income or you're making income and you're being paid in ways that don't count. You have no current job. Let's say you quit your job to start your business and you're in the beginning. I'm going to say it all the time. I can't stand gurus that encourage you to quit your job before starting your business. It is best to leverage that job and leverage that income, get you a loan or loans or credit cards. So when you go into starting that business, you will be protected. If you have an extension on your taxes, you actually need the physical extension. If you don't have that extension letter, you're hurt. If you show little income, if you're showing little income or a loss, you will not get funding. If you're not reporting all of your earnings, you're hurting yourself. And again, if you're using your business account for personal usage, that can hurt you every single time. They don't want to see that commingling. Now let's talk about cash flow. Why does cash flow matter? Okay. Your revenue is just a piece of the puzzle. The cash flow is what determines the strength of your business. Now, cash flow will not matter in startup or personal loans because they're looking at your personal income. So your business cash flow, it's apple to oranges, right? So your cash flow is going to be what comes into your account, what stays in your account, and what goes out. It's the flow of the cash. So all monies earned needs to go directly into your account, especially starting early. You have to make sure you have your services have agreements, contracts, and chargeback info. So if you are going to be a victim of an illegal chargeback, you are protected and your processor can make sure that you're protected. If you're using multiple payment solutions, it will hurt you. The more deposits you make, the better. So if you are working on only 1 to 3 deposits a month or 1 to 5 deposits a month, you're very high risk. Lenders really want to see a minimum of 10 deposits per month, and 15 plus is better. If you're using money laundering techniques, deposits without any explanation, deposits from your other bank account or from your credit card, the same IP address, the same billing bank, it could be from friends and family. That is also a money laundering flag. This will hurt you. And negative days. If you're seeing a lot of negative days, you won't qualify for an SBA, a line of credit, or a term loan. You may qualify for an MCA, but they only allow about 15 overdrafts in 90 days in order to get approved. Now, what does your cash flow have? What does it have to be? What does it look like? So revenue is key, but what stays in your account matters most. If you want a monthly payment loan or a line of credit option, the minimum average daily balance must be $5,000. Average daily balance that's how much money is in your bank on average every single day. If you really want a true business line of credit, your average daily balance must be $5,000 or more. So what does your cash flow have to be? To get the good stuff, right? This is really what you need to do. 10 plus deposits monthly. You want it frequently and consistently. I remember a few years back, there was a construction company that came to me. They made $100,000 every month, but it was in one deposit. Because they had that single deposit, no lender would lend to them. And this was the feedback that I got, which I already knew. The feedback was, what happens if they don't get that deposit? What happens if their customer doesn't pay on time? What happens if their customer is late? That one deposit would completely cripple them. So do not put all your eggs in one basket. You need to report all of your income and do your best to only use a single processor. All these things are going to strengthen your cash flow. Things that will hold you back. Again, 1 to 5 deposits monthly, sporadic deposits, running a cash business, using multiple payment solutions, putting money in your account that's not revenue. That will get you hurt every time. Getting loans from friends without a contract. I had a gentleman lose a $350,000 offer because he had a $500 loan from a friend. It wasn't a loan. He called it a loan. And the underwriter declined it because of this weird $500 deposit. Negative days and low balances. Now, let's dive into business credit, which is probably the most misinterpreted, misunderstood, mistaught subject in all of social media. Okay. When does your business credit matter? Y'all, listen carefully because you have been taught wrong. Your business credit doesn't matter like you think it does. Business credit can help or hurt when it comes to approvals. Your SBA 7A, equipment, factoring, and lines of credit will consider your business credit score during underwriting. Okay. New business credit or bad business credit can hold you back. So if you have a default on your business credit, if you have late pays on your business credit, you will get declined for all of these programs. If you dissolve your LLC and you form a new LLC and you have defaulted previous, it will follow you to the new business. Stop listening to these business credit gurus. They are lying to you straight up. Business credit. You need your business set up properly to get approved. You need your Duns and Bradstreet. You need to create a Paydex score. You want a perfect Paydex score? Pay 2 weeks early. Everyone says that. Having 3 to 5 lines are recommended. You will need funds to pay off the net 30. These are net 30 or net 55 accounts, which means payment is due in full. So I do not suggest you building business credit as a new business. If you are a new business and you're struggling to make sales, I do not suggest that you establish business credit. You need to establish consistent sales first. Okay. And business credit takes time. A lot of these people are teaching you rapid ways to build business credit. Business credit alone, EIN only alone, will not get you a loan. It will not get you a line of credit. It will get you vendor lines and corporate cards and store cards. It does not get you business credit cards. It does not get you a loan. It does not get you a startup loan. It does not get you a business line of credit. Listen to what I'm saying. How does your business credit score matter? I just said it. Business credit does not get you a loan. It does not. Underwriters will review your profile and payment history like with your personal score. Vendor lines can help your business as you grow, but make sure you're using it for business purposes only. So many people, Floor and Decor liquidation, that was illegal. Now Floor and Decor has a PG. Navy Federal is shutting down hundreds of thousands of accounts. Stop doing things you shouldn't do. Stop listening to these gurus' hacks because they're full of. What does your business credit need to be? So you need a DUNS number and need to create a Paydex score. Okay. You will get approved for tier 1 lines. You must make those you have to get tier 1 before other things. Okay. You need to make the minimum purchase. Make sure that you are choosing vendor lines that report to at least 2 bureaus. Okay. You must pay on time. It's suggested you pay 2 weeks prior so you can get that perfect Paydex score, and a single late payment will destroy your credit. So things that are holding you back, not being properly structured, not having your information match, if you're skipping steps or going ahead, if you have a missed payment, you make purchases you can't afford, or you don't even make qualifying purchases. You have to make sure that you do the qualifying purchases for it to even report. And it takes a minute to report. Just because you made a purchase doesn't mean it reports the next month. Sometimes it can take up to 3 months to report. And when you start applying to other tiers you haven't qualified for, it's going to be very easy for you to get declines. And bonus, I want to talk about how to protect yourself from scammers online, because this is so common and it needs to become uncommon, right? So the scammers are all around you. So here are the 10 things to look out for when deciding who to work with. Whether you choose to work with myself, the lone wolf, or my lending company, Cap Funding, or you go elsewhere, make sure that you are paying attention and asking these things to protect yourself. So number 1, are they making promises or guarantees without an agreement or contract? According to the FTC and the FEC, if anyone is making a promise or a guarantee, there must be a promise or guarantee. Example, I guarantee I can get you $150,000 in 90 days or less. And that's it. That is not a guarantee. This is a real guarantee. I guarantee you I can get you $150,000 in 90 days or less, or your money back. That is a guarantee. They have to have or your money back, or we continue to work on your file, or you get this free, or you get a partial refund. There must be the rest of the sentence. Okay. So if you're seeing promises and guarantees, run. Do they have a website or social media accounts? This is for financing, y'all. If you're going to someone and you want help with financing, do you want to work with an amateur or a scammer? So all of these cover amateurs and scammers. So not everyone is a scammer. Oftentimes you're working with an amateur that has no idea what they're doing. They're a rep or an affiliate that signed up to be a loan broker. They got a link and now they're telling people they offer loans. They have no idea what they're offering. They don't understand underwriting. They don't know what the terms are. They know nothing, but they will get you funding. So a lot of the time you're not working with a scammer, but you're working with an amateur. And because they say things that aren't right, it kind of turns into a scam on accident. Okay. So you want to make sure that you're not working with an amateur. I always make this joke, but if you're going to go 2-on-2, right? Basketball, you're playing basketball 2-on-2, and it's going to be you and somebody else, and you can pick Michael Jordan or a first grader. Who's picking the first grader? It should be nobody. So that's the same thing when you hire when you hire someone to help you in finance, you're picking the first grader over working with a professional. If they don't have a website or social media accounts that revolve around the program or product that you're purchasing, you may want to pump the brakes. Most of these people that do grants, that do loans, they don't have their own website. They have an affiliate link. Think about that for a minute. Are they requesting information or doing business with a non-domain email? Are they wanting you to send info to a Gmail or a Yahoo account? Do not do it. That means they're not even willing to invest $5 a month into a domain email. Again, they're an amateur and they could be a scammer. Next, do they want you to pay via Zelle, Cash App, or PayPal friends and family to avoid fees? I get that we're trying to avoid fees, but these methods are also ways in which you cannot get your money back. There is no way that you can do a chargeback on any of these platforms. So they want to make sure that they get their money. They're not worried about you. Next, do they have an actual business registered? Okay, so you do grants. Are you a registered LLC? Were you willing to make that investment and make sure that your business is legit? Also, if someone's doing grants or business credit, why don't they have their business register? Why don't they have a website? Why don't they have a domain email? You need all those to establish business credit. So why would you hire someone who does business credit when they're not even utilizing their own methods to establish business credit? Next, are they using words like fast, quick, or easy to sell you what they're offering? Take heed, take pause. They can either try to be tricking you to sign, it could be an amateur, or they're a scammer. What type of training or experience do they have doing this? Ask them who, what, where, how did you get this information? Who taught you? How long have you been doing it? Oftentimes these people get irritated, and that's information enough. If you're willing to pay somebody or hire someone and they're not willing to answer simple, basic questions, run. And the last three, okay, does their profile look professional? Scroll through. Are they professional or are they just wiling out? I see way too many people hiring people and their page looks nothing at all professional. Are they promoting hacks? Hacks used to be a wonderful word that us copywriters used to use in order to sell, and now hacks have become ugly. I haven't seen one hack that's either not a hack at all or actually legal. There's no hacks that are real legal. They're either things that you do or things you don't do, but it's not a hack. And do they avoid direct questions, belittle, or block anyone that questions anything? Let me leave it with this. One of the best questions you can ask somebody is, what do you do when you can't help a client? That's such a powerful question because 9 times out of 10, they'll lie and be like, oh, we've always been able to help everybody. Listen, I've been doing financing since 2018, February. I have helped over 17,000 people. I have not been able to help everybody. You can't. Some people aren't willing to help themselves. So pay attention when people answer these questions. If they act like they help everybody, they're fibbing. They're misleading you, trying to do everything to get the sale. Popular scams and illegal offers. Watch, write this down, pay attention. Fundbox forgivable loans. There are so many people saying that they work for Fundbox and they do not. Anyone that says on social media that they work for Fundbox and then ask for an upfront fee, that is a scam. They do not work for Fundbox. Grants with a guarantee. SBA with a guarantee. If anyone's saying funding is guaranteed, it is not true. Period. That is a lie. Again, credit sweep, CPNs, advances being labeled and sold as loans. I already mentioned this. It says in a merchant cash advance contract, this is not a loan. And they have a beautiful summary saying, if you were sold this as a loan, it was illegal and you can technically seek legal action. There's an age shelf corp for fast funding guarantee. That is false. You're not paying anyone $2,500 or $5,000 to learn about age shelf corporations. Those age shelf corporations, in order to get funding, still need current tax returns and financials. So you're buying corporations that have been around for 10 years, but they have no financials. You literally just wasted money. Money laundering tactics, the friend to friend, the UCC filing trick, all of that is illegal. You liquidating your credit cards and paying yourself, it is illegal. It is illegal banking activities, and you're going to get your account shut down. The iPhone play is another. And here recently, I'll add to it because I'm seeing it everywhere currently. But there's a group of women offering surety bonds saying that you are guaranteed 200, 300,000, 500,000. No PG, no financials, just need an executive summary, a business account, and a surety bond. They're offering to give you the lender for $1,000 up front. Guess what? That loan does not exist. They're literally selling nothingness. So we're going to see a few hundred people probably get frauded again with this. So what questions do you have for me? Go ahead and comment below, hit the like, hit the share button, contact me at ashley@thelonewolf.co or www.thelonewolf.co. We are here to help. If you have been scammed, if you have questions, comment below or send me your story. I would love to hear from you. And as always, thank you guys.